Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Can I please get a screen and audio check in YouTube and the Discord chat? Thank you. Uh, uh, Please remember I am streaming from Costa Rica, and internet and power can be a little challenging at times. Friday was a bit difficult with the internet going in and out. So just please be mindful if I do disappear. It's because the monkeys are swinging uh, on the cable, most likely. And the support team at Bookmap will, if needed, will place another link in the YouTube. I should be able to reconnect to Discord, but if there is a problem in YouTube, there is a link in the bottom of the YouTube chat and can bring you to the Bookmap server in Discord, where you can access not only the stream but all the resources available in the Trader Lab. So that will be there for you. Just want to make sure you're aware of that. So again, thanks for visiting the Trader Lab. I'm your host, Tom B, and I stream live, subject to monkey business. How do you like that? Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. This stream is built on structured trades that are available to everyone in the Bookmap Discord Trader Lab chat. This way you can download those 60 PDFs of structured trades, take a look at them, reverse engineer them if you can relate to them, if they make any sense. And then you can also see where they might fit in your plan. And I appreciate, by the way, in the Discord chat that you kind of keep any posts now relative to the stream. Thank you. Maybe, Tuna, you might want to post that later. Remove it would be okay. And then just put it back in after the stream. Because it forces things off the chat and I can't see it. Thanks. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is based on structured trades that you can all download. One moment, please. I have to delete that message. Okay. Thanks, everybody. Trying to take care of a little business here. Okay, everyone. So if you guys remember, Friday was really a nice long day. Long day, but it was also a long only day in the Trader Lab. So I hope you guys took advantage of it. And once we broke out of the consolidation I think it was towards the end of the stream, there was a big stop sweep on the breakout. And then once you're out there, it's thin air. There's nothing really to hold the market back at that point. The possibility is breakout, exhaust, pull back inside, and we really didn't. I think we just kept going. I don't remember. I wasn't here after 12 noon Central Time. So that's the condition of the market. And so coming in today after a move like that and all the media hype over the weekend, the new bull market, et cetera, there's a few things you might anticipate, of course. And what is that? Continued buying Monday morning, today, and also profit taking. So, the thing about it is, in this kind of configuration, the long side early would make sense. Then the late buyers potentially can get swept out. And then you got to see where it comes back And then that sets up our higher time frame targets that are above us. And like everything in a trade plan, remember it's only we don't know what's going to happen. So if you're in the if you think you can predict and know, then that's as good as flipping a coin, which of course every trade is a coin toss. But predicting is really not our business, in my opinion. Now, I want to try to get something else here for you to look at. Hold on a second. See if I can do this without making big trouble. This is Investor RT. It's my higher time frame platform, and it's RTH only. Just want to show you a couple of things so you kind of get a sense of perspective. Now, this is Friday. Friday's breakout day. This was the outside edge of the consolidation. Once you come out here, we had this for a target, which is around 57.5. We had this is where the highest volume was. It closed at the high of the day on Friday. That is suggesting acceptance at this level. The next target was up around 48.80-ish, right here. And then we have 49.06 and 49.13. So these are our targets based on auction market theory. Now, and you'll notice on Friday, this is what set up the long Friday. I want to show you this because all this is on the price map before the market opens. And what it basically is, we opened on Friday in the gap, came down and checked the highest volume for this swing. Let me just show it to you. So we know this. If you're in the Trader Lab, you would know it. Now let's be realistic. We don't know what's going to happen, but we know the levels. That's part of what the auction is about. Swing low, swing high, and then this was the consolidation. So all of this energy in this box, the buy stops were here. And that's where this red line was, which is a low volume node. So low volume, you might think of low volume like a separator, between consolidations or distributions. And this happens in all fractals and time frames. So that's low volume, that's low volume, that's low volume. But when we're looking at a higher time frame, which is all of this energy, so you have to remember consolidations. You got sell stops at one end and buy stops at the other. Well, when one of these guys or participants is off sides, you're going to get an acceleration. And, everybody's bearish, everybody's short, all the stops are here, and then boom, once you come out here, 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 and above. Okay? Is everybody tracking? So that's the higher time frame or intermediate time price map. Then what we're doing with the auction, the concept of the auction. And now this, don't forget these are futures contracts, so they're back adjusted. This is the last time up in this area where this is the highest volume. So in the intermediate time frame, this level is coming off of here, which is going back to, let me just give you the date, November 8th, 2021. So this is a key level of volume. And that is saying this is too high, this is too low, this is where the high volume is. So that creates a target at 49.06, and then 49.13 is the highest volume from this day. And we haven't tested it. So that's what sets this up. So this is our, you might say, our price map in a higher time frame, and then we go down into the developing time frame. So the market tends to operate this way. Hold on, I'm moving things around. Don't forget, I'm on Costa Rica on a laptop. And let me tell you, that gets a little challenging. So let's come back here. Let me see if I can see the chats. I have to try to see that. Hold on, guys. Everything gets scrambled. Okay, I think we're okay. I'm not sure what's first. What's going on there? Let me get back here for a moment, guys. Hold on. Are you guys still with me? Am I still percolating here? Kind of hard to tell. Okay, I don't know. First, are you asking me a question? I'm not sure what's going on. Okay, so let's go take a look at the open here. Let's get back here. So we have a couple things that are important. Overnight volume point of control and the overnight mid. What the overnight volume point of control is the highest volume in the ETH. Think of it like a retail price. Now let's go down the other side of the price ladder. I just got to get into this. Yesterday's high, ETH low. There is no value yesterday. Value area does not exist in theory. And so you understand why the market went into a trend configuration. It doesn't know what it's worth. When you trend, it is the market out of balance. Out of balance means it's not rotational. Even though it can rotate inside itself, it is directional. That is a trending configuration. So in a trend, what you have is the market doesn't know, so it just rolls. And then you had the breakout of that consolidation, so all the buy stops. So that's the fuel. So on a higher time frame, all these shorts were getting used. So, but this in the ETH is an important level. And I want to go down the price map a little bit further. This was the highest volume on Friday. So here's what we know. We opened above it. So what's our potential price map? Here's our open, overnight high, ETH high, potential to check there. So that's a target. Here is a target, high volume in the intermediate time frame in this. So going up, this is the price map. Going down, fill the gap in this, and overnight mid and overnight volume point of control. Those are the key levels in the auction for the starting out before anything happens. So those are important to note. Is everybody with me so far? How are we doing in YouTube? We okay? And remember, if you're in YouTube, appreciate you visiting the Trader Lab. If I drop out, it's because of the monkeys swinging on the vines down here in Costa Rica, and Bookmap team is backing me up here. And if I go south of the border, which I literally am in Costa Rica, they will either put a new link or connect the link somehow so I come back, assuming the monkeys get off the vine, or you can come to the Bookmap Discord chat. There's a link in the bottom of YouTube, and it'll bring you into the Bookmap server. You don't have to be a subscriber to Bookmap now, ever, never, and Bookmap will never solicit you. So that's an option. Plus all the resources in the Trader Lab, 60 PDFs of these structured trades, and a library of webinars. So you can kind of get the lay of the land and how this process might work. I do not use any indicators. I basically let the participants tell me what's going on. And but I do have something on here that I can discuss with you if the circumstances permit, and it's called Market Pulse, and that is a tool available in Bookmap that I've been spending some time with. So I'll show you how that works also. So anyway, RTH open. Remember, ETH retail price, and the function of the market is it's really a shopping experience. It's very exciting. Let's go to a store. But the idea of the market is to figure out what is too high, what is too low, and what's retail. And it does it in all fractals and time frames. And this is the thing we have to remember. As day traders, we are trading inside of multiple time frames. As you think of them, it's time. I don't use time, but same concept. I just use structure. So it's very similar, except to me, I don't try to put the market in a box. I don't say you've got to do something in a 5-minute structure. You just need to do something in any time frame structure, or length of time or volume based structure, not clock based. So it's similar conceptually, except it's not, the clock is not overlaid in this. So here, let's look at the first opportunity here. Now, the yellow line is called the developing volume point of control. And what this is the highest volume price. Now remember, if we're shoppers, we're trying to determine the market participant behavior of what's too high, what's too low. We also know that this is the ETH high. We know we are in an uptrend. We know we have broken out, and we know that if anybody is still sitting short in here, that they're not going to be thrilled. So and anyone who missed yesterday and all of that, will want to get in potentially this morning. Of course, we don't know what's going to happen, so let's not think about that, because we're not in the prediction business. We're in the business of maybe, just like the casinos. So let's look. Market opens. Now we know a couple things can happen. Obviously, we could get profit taking, which creates the downside rotation, and then the longs that are in here can come out. That's one piece. The other piece is we can open, and those who missed it can take the long, and then that would put the ETH high on the table. So it's one or the other, and nobody knows. So our job is not to know, because we can't. Our job is to follow structured trades. So let's see what they are. Let's see how it sets up. So this is a developing volume point of control. The way I think about this, and it's just sort of a mental state, is shopping. So I'm trying to, let me get this off of here. This is not relevant to what we do here. Where to go? So RTH open, two-sided trade, okay, and it's like, who's going to take control? We know we have our overnight high above, and we know we have the overnight volume point of control below. We can go either side. So we want to see which side becomes dominant. Now I'm going to take you into more microstructure, so let's look. This is called right now VPOC migration. This is a very subtle early indication of control. And if the volume and the price, theoretically, are moving higher, then potentially, and it's logical too, let's think about this. Market moves a bit higher. It could be a hair higher, but here we're talking from 86 to 86 and a half. That's only 2 ticks. But why would the market potentially move higher with the high volume and the price goes higher? Because this price might, and I always have to say maybe, because that's all you got in this thing, be too low. So I'm going to mark it variable high volume node. So think of this like in a store. They raised the price, and because there's more volume here, which is what this yellow line represents, and less volume here, that maybe there's more acceptance of a higher price. Let's just mentally try to track that. Now let's just watch the behavior. Everybody see the first long. This is where we're going. First target achieved. Now I'm just showing you the structured trade. This is a structured trade. This is called VPOC migration. It's in the Trader Lab. You're all welcome to it. And please understand, these are not mechanical. One of the things that's confusing, I think, is, it's when we're evolving or developing as a retail trader, and I know for me it was like that early on back in the Stone Age, that we're kind of looking for red light, green light, and I have to suggest that that's rather naive to think that we can buy a software toolbox, plug in indicators and time frames, and then actually have a business that's going to be profitable. That's what most retail traders do, and most retail traders do not succeed, obviously. We know that. And you know it too if you've been in this business more than 5 minutes. So the thing is, what do retail traders do? Very important to understand. And then what are you doing that's different than what they do? Are you doing the same thing they do? If you're doing what they do, it's probably not realistic to expect a different outcome. Instead, let's understand what they do, why they do it. Let's take the experience and potentially the tuition we've paid for this information and then understand what does not work. And it's really our business is gaming. It's we're trading, but basically it's a gaming process. So we're in a random environment, and it's not a predictive environment. Most of us think we can predict something, and I mean that's just our orientation to predict, and that's not the business of trading. The business of trading is a random environment like the casinos, and playing a game with anchored inputs that has a statistical edge. Understanding that the outcome of any hand in the casino, just like how the cards come out of the deck or how the gamblers play the cards, is all random. There's no control for the casino in what happens in their play. So what do we have that's similar to them? If we only play games, if you will, or setups that have an anchored, structured process that has been vetted, then we know that with a vetted, structured scenario, that each individual setup has a specific edge in a specific condition. Our job is to basically play the game when that whatever that structured trade is, just like blackjack is a structured game. That's our business. It's not predicting. It's not anything, because we can't know, just like the casinos can't know the outcome of the next hand. And now if the casinos lose, which means the gambler walks out with the cash, are they going to change what they do? Are they going to retune their blackjack game because somebody walked out with a suitcase of cash? No, obviously not. But that's what we do. That's retail trader behavior, and it's all about, I don't want to lose. I have to tell you, gaming is not about winning or losing. It's about extracting the statistical edge over a large sample size of random interactions. And for us, it's with the gamblers, if you will, or with the market, depending how you want to, look at this. So that's really the business of trading. It's not what we think it is, most of us, at least when we start out, because we think we can predict something. And I'm going to suggest you leave the prediction to the fortune tellers, and that you work on understanding edge and deriving it and only interacting in this random environment when you have edge. So this is our first target. So structured trade, long, if you're in the Trader Lab. By the way, if you're in the Trader Lab, guys, did you guys participate in this Trader Lab structured long trade? Which right here is the test. So look at the logic. Let's look at logic. And this is why I don't use any indicators. What is my indicator? How about the participant behavior? Not a line crossing or an oscillator or an RSI. What? Well, right here. So too low, too high, too low, too high. And right here I'm going, I don't know. Except I have a statistic up here that's a high probability. And it could have gone down before it went up. These are the things we know. In other words, like the casino, we know we don't know. So we take away this need to be right or to predict what it's going to do. Even though as a human, we need certainty, yet we can't have it in the trading environment. All we have that we can depend on is uncertainty. Very counterintuitive. So what does the market tell us? Well, the volume is moving higher. Let's go back to our shopping experience, which is what really trading is, in my opinion. It's shopping. If the price, and price is two components, literally where the price is, but the volume. So if this was the supermarket and you start out and you could buy a can of tuna at $1, because this is where the volume is, starting at the RTH open. That's when this all starts. And now we have more volume taking place at a higher price right here. Isn't that saying you can't buy it here anymore at this price? The market comes down and checks the price. Do you want this $1? This is $1.10. So if this is $1 and now they check it at $1 and they're saying, no, you can't buy it here, and now the new retail price is $1.10, then this might be, and I'm always going to say might be, too low. Notice the behavior. Lift, pull back to here. Is this now retail, and is this still too low? Now, it can do anything, right? See the buying. Remember, target. So I'm just showing you a sequence of how, without indicators, we're reading the language of the market. So if you got long here or here, these are Trader Lab structured trades. Your stop would be under here. This is your scale. Now, if you want, you see this liquidity sitting in the book, you could scale here. It's all up to your plan. Well, I know statistically there's a high probability, and past performance is not necessarily indicative of future results, that this is going to get taken out. All these, and there's high level of statistic here. It's over 90% probability. Past performance not indicative of future results. This is going to go. So you could target that or this. It's all subject to you vetting a trade plan. So let's watch. So you're hanging out, you're long, you're having a wonderful time. Fantasies of the yacht. Let's watch. Now, liquidity sitting in the book here. Let's watch this. Now, there's a difference in liquidity, and you could get, there's a lot of information, of course, on order flow when you're using a tool like Bookmap. But let's look at this over here. Now, all of this takes time, you know. This is resting liquidity. This is resting liquidity. This is material. This is algorithmic, you know, which is noise in many ways, though it can impact on a short-term basis. You know, the algos can influence. So there's a lot of variables running around. So the thing is that you have to have a plan. All this is done outside of trading hours. You know what you're going to do before it happens. And the reason you have to know what you're going to do is because we don't know what the market is going to do. That's part of the joy. You know, this is part of being in a random environment. And there's no way around the randomness. So right here, let's look at this. Market comes up. This is absorption. You got some icebergs coming out. You have 116 buy stops. So right here, we're looking at this. And it's nothing to do except it's in alignment with the overnight high, ETHI, which is a high probability statistic. And you guys, all these statistics are available if you're interested in them. Trying not to spend time with them anymore. And it's all available in the Trader Lab if you are inclined. So this is material. Let's watch what happens. It's just a level. What you're going to see is behavior. What happened here created volume. There's the volume. There's the mid. There's the VWAP. So let's just watch the behavior. This is called VPOC migration from here. Let's label it. This is process, by the way. So let's watch it. And when it moves, remember, what is this yellow line? All it is volume. And the yellow line moves because there's now more volume here than there was here or here. So if we're in the shopping experience, the market's moving higher and the volume is moving with it. That is suggesting this is too low. So I'm going to mark it, right? I mean, what do I know? I just followed the yellow brick road. I don't know. By the way, I use the term I don't know, and even better, clueless, because if I close my mind to what's happening and get passive and don't think of the possibilities always, I might miss an opportunity to either manage my position or add or, you know, whatever my plan is. So now let's go take a look. So we pull back here. And we have a structured trade in the Trader Lab. So let's label this. There's another one coming up, another structured trade. So this is liquidity. Let me just put it in here. I label these things because I don't know. So right here, we took this selling out. We absorbed it. You can see it there. And now we come up to the next level. We got our stat here, and we're going to the next layer of liquidity. So let's watch. This shifts up. Now this sets up, here's what can happen right here. Right here, we have a couple possibilities. We have another structured trade that's in alignment with this. It's called VWAP or mid to VPOC. So it would be out here, back to here. That's a structured trade. We also can just manage this trade. So let's see what it does. So those are the possibilities. And we're going for this as the next obstacle. So let's watch it. VPOC migrates down. So right here, let me open this up. I'll show you. Now, we don't know. I look at this and I'm going, and this is what, just like a deer in the headlights. So right here is volume, and I don't know. Pull down here, VWAP, pull back to this volume. Nothing to do here, by the way. Right here, we get VPOC migration. What I want to see happen is I want this to push off. Instead, it pushes down. So right there, if there is an issue, it has to hold above mid and VWAP. So this looks like this might counter rotate right here. Right here. So let's watch. VPOC migration. This now is resistance. This is resistance. So too high right here, too high. If when we come out this way, this now becomes support, and you don't know. So let's label it variable high volume node. So this is my outside edge. And there's no way to know this stuff. If you think there is not, because this could have been a reversal here. I mean, there's just no way to know. But what I know is, at the moment, I'm over the ETH high. I'm seeing the market move higher. I've seen the market pull out to the VWAP in mid right here. This was tenuous at best. When we clear this and this, I'm back on, this is another long. This can be an add. And if you got long here, or you got long here, you would take a stop on this position. That's just the way it is. So now let's watch. This was absorbed, so we want to see this location, and we want to see what happens if we come outside. Now, here's what's happening here. Market's going up. You notice we have a rotation. We come up, and now we have a rotation. The condition of the market has changed. It's gone from directional to rotational, and there's no way to know right here whether we're just going to continue up or if we're going to start doing something called mean reversion. Now it's a different plan inside a plan. So let's watch. This was an outside edge, and this is what's going on. So the longs in this leg now, this is the pullback, fine. This is resistance. This is a potential long right here. Right here, it looks like we're going to continue higher. When you break below and you pull back here, so this is support. Support is right here. You see the behavior? It has to clear this. When it does not clear this and it comes under here, it's either get out of Dodge or potential short subject to your plan. For me, there's no short. I just sort of hang out. And it's just a matter of choice and time frames. Because I still have targets up above. So I'm still thinking possibility to go up. Now, here's the other piece. Where was it too low? Here. So I know in the ETH, this was retail. So if I'm slicing this apart, I'm thinking too low, going higher, not going higher, pull outside, take the stops out. Now right here, this is a condition called mean reversion. This is complex in the sense of we don't know, we never know that the condition of the market is going to change until it does. That part, no privilege to know, can't predict anything. But we know the behavior. So when this right here right there. This is like the, right there. Got to hold that. Oh, is that too low? Then we come back and check this price. Is this price too high? If we clear it, off we go again. If we don't clear it and we break this, then the potential is to go down. Where to? This is always the wonderful question. Here's where. Somewhere, this is the joy, out here. And what do we have out here? Well, this was material. So I don't have personally a trade here, okay? I just know, well, somewhere out here or not, or we can come all the way down. So I have nothing here. So this comes out. If I initiated over here, I would take a stop. If I was long from down here, I'm going for targets up here. So that's all I know. So right here, this is a potential long. I have nothing to do. I mean, I don't have a setup for that in the Trader Lab. So let's watch. Let's look. What do we get here? We come back to the volume point of control. This right here is resistance. Break above. Look at the test. Pull back. Support, resistance. What is it going to do? Is this too high? It shifts down. Notice the behavior. Now this is retail. So I have this. I have that, too high. I have this. I break above it. Now this is support. Pull back and check it. Pull back and check it. This is a Trader Lab long. Joy. Notice the joy. And where do I come? I take this liquidity. And this was sitting in the book. So just watch. So I take this. So my long is here. This liquidity is sitting here. So if you see it, you would take a scale. If you're in the Trader Lab, basically this is where this thing fails. Under here. Under here. There. You take your long. You would get risk neutral subject to how you manage your trade in the Trader Lab. Where does it come? Let's look there. There. In the Trader Lab, your stop would be under here. This is a potential add if it's in your trade plan because we're checking this retail price. Is that too low? Yeah, it's too low. We'll see you later. Where was it too high? Here. If you got long here, you'd scale ahead of this liquidity right there. Ahead of this high volume right there. This is fractals. Now, I'm going to just take you into another little dimension. You see this up here? The chop, 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 chop. The chop is really an auction. It's a consolidation. Inside of consolidations, in every fractal or time frame, hold on. YouTube is frozen. Oh, okay, great, thanks. This is microstructure. So this is chop, chop, too high, too low, too high, too low. And inside of this is volume, and you could see it right there. It's the same thing as this yellow line, but the yellow line represents all the volume for the day. So this high volume is a retail price. Now let's go a hair lower time frame. This is the previous retail price. It was too low, and you see the yellow line moved up, saying there's more volume at this price than there was down here. I look at this as pricing. So if this is too low and you can't buy S&Ps here at the moment, if we come back to that price, you can't buy them there, the market's going to leave. Now, where was it too high? Well, in the fractal, this was too high. So if I get long here, or I'm managing my trade under here, then I got to scale ahead of there. Does that make sense? So I'm trading high volume to high volume in fractals. So all I'm really doing here is trading high volume to high volume because of what high volume is. The relationship is going to the store, And wherever buyers and sellers agree on a price, that's high volume. It's called retail. So in all fractals, or as you guys think, time frames, this process is taking place to try to figure out what's too high and what's too low. So in a developing daily time frame, this was too low. And in the fractal, or the more micro structure, this was too high. That creates that down leg. So it's shorter time frame back to higher time frame. Hope it doesn't make you crazy, but that was too low. If you were to imagine the same process here, and this was the whole day, fantasy land, in the middle of this is high volume. When we go to higher time frame, the developing daily time frame, the yellow line is the same thing, high volume. And this yellow line down here was the previous retail price. So this is too low. This is currently retail. And in the microstructure, this is too high. So back to here, back to there. Does that make sense? Can you see the symmetry and the behavior as far as how it potentially works? Now, nothing is mechanical, guys. But here's the thing. If the trend is up, I think I want to be trading the long side until it breaks. And I can't, well, I can't. Maybe you guys can, but I don't know. You know, I don't have any idea. Here's what I do know. ETH, this was the retail price. So let's think of this in pieces. If this was retail in the ETH, and there's the overnight mid, and I know I have a high probability of getting back here, maybe, but I don't know where I'm going. I mean, am I going to do the Acapulco cliff dive and all these longs get shaken out? Or am I going to go to my targets up here? You remember at the top of the stream, 07 and 12, 13-ish. These are my upside targets. Now remember, when it comes to targets, it's best you have is maybe. So maybe, and you could write those down, and I have no clue. You know, it's not my job to predict anything. But my job is to really understand the purpose of the market is to figure out what's this thing worth. You know? So, too high, too low. Back here, let's watch. No clue. Remember, long to here. Why? It was too high. There's my high volume. So I look at this like long to here for a scale. And then I have my targets up above. And it's just, you know, whatever. Part of the joy. Now what? Break. So now we know this is too high. Always good to know. And when do we know this? Only in hindsight. Stop sweep. Okay, and down we go. So if you're holding a long, you'd be taken out of the trade under here. So if you got long in here, or you got long here, you'd be risk neutral. We saw our seller here. There's our seller. You notice the change in behavior. If we're holding a long or we add here, this is our obstacle. You can see why if you understand auction, how the market works. You know, remember how the market works, we can understand. What it's going to do, not up to us. So this is where it fails, right here. Notice where we come. See, I mean, you could keep your stop behind the VWAP or the, you know, whatever your plan says. For me, I know if I come under here, I mean, I can test a little bit, but if I come under here, then that is too high. Now this is too high, this is too high, and we do the Acapulco cliff dive. So that's that, you know, that trade is over. So now let's see what goes on now. This was too low. For me, I have nothing out here to do in the trader lab. So let's watch. This has changed its behavior. This is now, remember, mean reversion. So now we're in a rotational trade, and there's no way to know what's going to happen. That part still working on. And this is what you've got outside back to here. This is called mean reversion, and it's mean. So I don't have anything here, you know, because I now have targets on both sides of this thing. I have this down here, and I have yesterday's high, wherever that is. I don't know where it is, down here, right? Fill the gap. So I know that. So I have that. I have the overnight volume point of control. I have that as a possible target, and I have these other targets above. So I'm in the middle of this thing. So let's watch and see what it does. Now, the thing to understand, and I really, if you're in the business of, gee, every wiggle, that's not the business of trading. The business of trading is just waiting for your wiggle, your structured trade that you vetted, because you got to think like a casino in the sense of where's your trade and do you have an edge? I mean, the fact the market is rotating like this, if you don't have a structured trade that has a statistical edge, you don't have a trade. You're just sitting here going, oh, that's interesting. So let's watch. So I have nothing here. Others may. I don't. At least not in the Trader Lab. So notice where we come. Let's go back here, by the way. High volume was here. Come back and here, let me show you. It's easier if I show you. Notice how the seller came in here. This was too high. The buyers are activated here. That was our last long. We come back. We check this volume. We reject it. That's saying too high. I mark it because now this comes back in again. Notice where it comes back in. I call it an obstacle, and I have no clue. I know that if I get long anywhere, this is now potentially too high. Notice the behavior in the book. Now, no clue. All right. Not my job. Not my job to predict anything. This now becomes a target. Remember, this was retail in the ETH, and there's a high probability of getting here. The statistics are available to all of you in the Bookmap Discard Trader Lab. So, and the overnight mid. So this is our outside target, and then there's further targets. Also, there's another thing that we have in the Trader Lab. It's called the IB, the initial balance. At 9:30 Central Time, and it's actually right. Let me just find it here for you guys. We have a structured trade I'm going to show it to you. Here. At 9:30, the first hour's low is called the initial balance, and it's located there. What we have is two possibilities. If we think the trend is up and we come down, and there's no, this is our target coming down. Remember, retail. So we're checking retail in all time frames, fractals and time frames. This was too low. So we found what was too high. The market in all time frames and fractals come back here. So where do we come? There. This is created by high volume in the ETH. So if you were short, which no short for me, this would be your target. When you test this and you see the sweep, now the market is short. This is what right here, this delta is showing you the selling leg. That's what this is, delta. And this is market pulse is showing you potentially oversold. And it's not a buy indicator or anything. For me, it is it's showing me oversold condition, and it's showing me that we have sellers in this leg. So when the market gets short, and that's what CVD shows you, if we hit an extreme, these guys become buyers. So let's look at the potential long here. Now, there's another thing here too. We have a trade in the Trader Lab called the IBF, or IB failure. The IB failure is a potential long mean reversion trade. So I'm going to show it to you. So if you were short, this is your target. Or a target, you could scale, you can flatten out, it's subject to whatever your plan is. When you check this, if it's too low, then the possibility is to come back, and here now sets up the IB failure. It's called their IBF. It's a mean reversion trade. So the way this works is, this was a return to check high volume. It's mean reversion in a different time frame. If we get the same type of trade, we can come back and check mid, VWAP, and this, mean reversion. Same thing, different fractal. Let's just see. So right here, Market comes down. I see absorption right here. 257 sell stops come out. This is showing absorption. That's all happening right here. Stop sweep, absorption. So right here is a potential. Let me show you the trade. So right here, now if you're a short, this is an exit. It's not a long yet. So here's your micro high volume structure. It's a suspect right here. I'm seeing the buyer. I have a location. Let's just put the pieces together. Outside edge, seller, more sweep, iceberg buying. Let's just watch it. Watch. Pull back here. Here's volume. Remember, IB is this yellow here. This is called the IBC, IB continuation. I'm sorry, IBF, IB failure. You know, it's Monday. Things are slow in the brain. So this is a long, and you're going for the stops at the mid, the VWAP, and potential return to the mean. So let's just see how it plays out. Okay, so you take a long here. You're trying to get back here, here, and above. And you would take a stop on this trade. That's the way it is, guys. So now this is too high, this is too high. So this sets up, this is a change in context. So what you have now is we came back up here, long, failure. Once it fails and you come back from below, it sets up a short here. This is now the IB continuation trade. Same trade, but from the other side. So when you pull back here, this is a potential short. Context has changed. And we're looking now to take these longs out. So let's just watch. So we come back, we check this. We're below the open. We failed the IBF. We didn't get to take the stops out at the mid and the VWAP. There's your sellers. Here's your retracement. So this is the IB continuation. Come up, short, break, back to here. This is your entry, or if, depending on your skill set, your entry's in here. Most likely, you'd be getting short against here. Stop needs to go here, and then you're looking for continuation lower. Let's go look. Yesterday's high. Here, fill the gap. So that's what you're looking for. So this is a short. Let's assume you're in here and you're looking to fill the gap. Trader Lab. Now, right here, you come back. We know there's stops here. We have our mid. We have our VWAP. Come back to the mid. Come back to the volume. So right here, you're looking for it to squeeze. And here's the other piece. We come back to this outside edge. This is a low volume node. Let me show you the profile so you can get a sense of what happened here. This is the high volume. And we were rotating around this, right? We're trying to trade outside in. Well, we fell out of all of this. Now we're kind of trading the other side of this. So if we come back out here and we can't get above the VWAP and the mid, then the potential is to rotate back down. And we don't know. And depending on where we go, if we get into yesterday's range, to come back here. So that's what we know. What will it do? Don't know. Let's watch. Choppy. So potential right here, too high, selling structure, rotation down. What's over here? Watch. Buying structure. So you get your buyers on this side. You have your stops here, potential short to here. You still have the potential to come here, and just for the joy of it all, you have the potential to come here. So it's two-sided trade now. And I would say, unless you have a specific plan for this, that if you're just clicking and all, you can really get, you can have a hard time in this. I find that for me, I just like to trade the bigger rotations. This is a viable, against this volume is a viable short, mid, but we also know there's stops at the mid and the VWAP. So, and if we clear this, we can go here. So this is very much kind of subway purse snatching is a way to think of it. If you're compelled to try to trade this, you may find you overtrade and you don't really have an edge in it. So the way I find to do this is just one piece at a time, understand market mechanics and understand the condition of the market. You know, we're in a rotation. That's one piece we know. We know the trend is up. We know that we filled the gap pretty much. And we know if we come under here, we can come here. We also know if we can't get down here, we can continue on to the north side. This right now is the high volume. If we stay under here, just so you know, and we put in more volume here, and this shifts down, it means that this is too expensive, and now we're accepting this. So you have to watch the behavior of this high volume up in here. So as this fills in, let me just see. You've got about 16,000. Well, let me open this up. There's a lot of volume sitting up above us. You see it here. 16,000 versus about 11,000 here. So there's a lot more retail, if you will, up here. So unless we stay here and more volume happens here, we still have the potential to come back here. So we'll see. But right here, there's nothing to do unless you want to trade these kinds of rotations. And that's really up to your trade plan. What you have to decide is, do you have an edge here? Is this a game that you should play? For example, if you were in the casino business, should you be in this or should you not? Should you be trying to operate in this range? You know, yeah, maybe, maybe not. You know, and I can't answer that for you. I prefer to trade less for bigger rotations versus trying to pick this off. Because what can happen for me is, you know, I get a scale, I get taken out. And it's like, what am I putting risk on for? You know? Do I want to scalp? No, I don't need to be busy. You know? So that's me. But that doesn't matter. The thing about the Trader Lab is it's not what any one individual does, whether it's me or anybody else. It's about you understanding market mechanics, how it works, and how you might get in alignment with it. And just like the casinos, only playing games that have a statistical edge, you know. It's all random. So, you know, there's no way to know what it's going to do right here. But what do we know? We know pretty much fill the gap, right? Well, if the gap is filled, I mean, we missed it by a hair. This is like horseshoes and hand grenades. If we didn't get to yesterday's high by a tick or two, and we saw absorption here, and the buyers, there they are, came for it, do you want to be short or do you want to be long? Me, I prefer the long side because the trend is up, if you haven't noticed. So outside, and where's the shorts in this leg? Where are they? Where are they? Where are the mid sellers? Buy stops are here. Buy stops are VWAP. We cleared this and this, then I'm going back to VPOC or not, you know. And that's all there is to this. This is not more complicated. And the reason it's not more complicated is we have no control over the outcome and it's absolutely random. So then it's a matter of what is the condition of the market? What has it done? If this is too low, then the potential is to come back and check, is this still too high? That's the potential. So that's what we're going to watch. Okay. In the meantime, do you have questions? No silver bullet. This is Market Pulse, by the way. I'm just going to show you this. And I don't use this in my trading per se. It is something that might have some value if you study it and understand, you derive an edge with it. It's a piece. You know, indicators in a vacuum don't work, in my opinion. You got to understand the condition of the market to know where this might apply. Not, well, look, it's oversold, so let's get long Where? Should we get long there? Do we get long there? How about there? Well, that one's pretty good. Do we get long here? Do we get long there? Do we get long there? See it? Do you get long there? That's the fallacy of indicators. So what I do is I look at the condition and behavior of the market. That's called the context. And the context transitions from directional to rotational. You need to understand the difference. If it does change, you have a specific plan for it. Now, we don't know it changes, of course, until hindsight. So you'll be long, and then the market's going to change condition. That's what protective stops are about, and that's what trade and risk management is about. Once we come outside, and remember, targets, we had one here coming down, which was what this was all about. Once you broke below it and checked it, then it's filled the gap. Next target. If it's too low and you see your buyer, now we know we have buy stops above the mid. If you pull outside, then you have outside edge. This becomes something called mean reversion. And it's hard in the sense of we don't know where the outside edge is. But here's how you can tell. I mean, you can't tell until after it happens. This is, the joy. So sellers in this leg, still going down, lower low right here, no way to know, right? And what we're doing is we are testing this here. This volume right in here, we're testing this. Now you don't know. And when you're seeing this, you think it's the end of the planet. But now I see my buyer. There's the change in behavior. Now let's go look at this structure. Right there, above the arrow, is high volume. So this is where the volume is, right here. I break high above the volume. So this is my retail right here. I break high, I pull back and check it. There. So this is my retail in this consolidation. Now I also have this. I'm on an outside edge. I check the mid, so I know about that. And I know retail traders. Remember, think like a retail trader. Don't act like one. Keep their stops here. So if I take a long, I'm going for this. And then I'm going back to the mean. So let's just see what it's doing. And it's not a trade recommendation because, it could do anything, right? So what I'm looking for is these guys to get squeezed. And also, if I get long, I have to scale in front of this in case I get more retail sellers up here. And it creates the counter rotation. And this fails, which of course can always happen. So I want to be long, scale ahead of the mid, and then hold for the squeeze of the mid, buy stops, VWAP, and here. This is the target on this trade, not a recommendation. And, all trades fail, right? Are you guys tracking? Does that make sense? Is it logical? Now, randomness, write that down. It's all random. Don't worry about what's going to happen. Nobody knows. Does that make sense? Isn't it interesting that all of us want to know something for certain? And that's really about risk aversion. I think if the casinos operated that way, they would never deal the cards. So what they have done, and that's really our business model, is to only play games where they have a statistical edge in a completely random environment. They don't make up games. They don't change the games. They just anchor them. And I cover this in my primer webinar. It's got over 27,000 views. It's you can access that in the Bookmap Discord Trade Lab chat, as well as 60 PDFs of structured trades that you can reverse engineer in a library of webinars on this process. Trading is just what it is. It's a random behavior that is subject to all the entities or participants that are in the participate in the market, algos, HFTs, market makers, everybody. It's all random. You know, you get an economic report or something, it goes into the mix and it gets processed by the participants and they vote on the price. So, so if you get here, you have to scale before this and then you're hanging out. And if it fails, remember, if we come out under this, we can go here. This was the highest volume on Friday. Think of it as a retail price. So we're just sort of waiting to see which way this is going to go. There's nothing more to do. So long, risk neutral, stop under here. Take this out, trade's over. That's all there is to it. And then you're looking at this. If this holds, then we're looking back here, and then maybe higher. That's all it is. Nothing more complicated than that, and there's no prediction because I have no idea. I can't have an idea because it's always a guess. Just like the casinos, they don't know. I'm getting a question from the Trader Lab. Is the ETH VPOC no longer material? It is material. The ETH volume point of control was the highest volume price wherever. Oh, this one up here. I'm sorry. Is it no longer material? No, this is no longer material. Sorry. This doesn't exist anymore. It was material first time when we tested it. Once we came under it, we had the test down to this, yesterday's high, which we could still come down. And if we can't come down here, so this is gone. What is material is this highest volume from Friday. So think retail. We are above it. And as long as we stay above it, then we're looking at VWAP, mid VWAP, I should say, and back to this. So it's longs only. And here's your test, right? Volume was here. There's your buyer. This volume is too low. Come back and check it. There's your buyer. This volume is too low. This is where the stops are. We are looking for it to come here, take these guys out. So at these swings is the buy stops. So we try to trade into those. Now, we don't know who's right. So we'll see what it does. So basically you're sitting, whoa, sorry, somebody has a loud something or other going by. So too low, there's your test. Let's look at the other side. Too high, there's your seller. Two-sided trade. Here's your test of this volume. Here's your test of that volume. Two-sided trade, okay? There's stops under here. There's stops above here. So now it's about which side, right? Well, to me, until it breaks, it's longs. If it breaks, then that's okay. You know, it just is what it is. So I'm looking for it to revert back to here. But it has to clear that outside edge of this to get to the next level. That's it. Nothing more complicated about this other than maybe, and it's random. But we'll see how the auction plays out. This is what auction market theory is. What's it worth? Now, here's another little piece. Market pulse. Shorts in the leg, starting here, sellers. Market pulse is showing you long. This is still showing us the delta is short, so we still have more sellers. Let me open this up a little bit. Sellers in this leg, starting here. You have your market pulse showing you an extreme over here. That's if you're an indicator person. I'm not. But let's watch it. Excess in here. Let's look at it from the other side. We are not overbought. So we still have shorts in all of this. So subject to, this is still suggesting long side according to market pulse. Again, it's not for me. I don't trade with it, but it's something I'd like to share with you guys. You can kind of see the interaction. So this is the down leg that we're trading. The delta is showing that the aggressors are on the sell side. Okay. And at some point, if we can't continue down, the sellers in this leg become the buyers. So the market pulse is showing us the excess, and now we'll see if we, and remember what we're going for. This, that not recommendations, back to here. So time is not an issue. I should say an element in this. It's just structure and participant behavior. So we'll see what it does. Any questions now in YouTube or from the Trader Lab? Market Pulse. I'm getting a question what Market Pulse is. Go to the knowledge base, Patrick. There's a bunch of algos in there, and you should familiarize yourself with it. Too much for me to explain here. Well, I'm getting a question. Am I okay taking longs below the IB low? Well, yeah, I am actually. And which doesn't mean the market's going to, not fail here and go down to here. See, here's the possibilities. This is a possibility. That's a possibility. And this is a possibility. But what did I do? Let's go and look at what we've done. Yeah, the IB is here. Now, in the Trader Lab, we have a couple structured trades. We have potential short here. Here's a potential short. Back here's a potential short. Okay. I also have this down here, the gap. So as long as I'm above this, don't have much problem going for this. If I can't get back above here, and especially out here, then this is on the parade. And I can't tell you which one. So this is too low. This is my test. This is where the stops are. If I get long here, I'm coming back to this. I have options. I can take a short here and short it there. And I'm betting I'm going to take out this and go down to the VPOC below. This. So if I clear this, then I've got this, and that. That's what I've got. I don't know which way it's going to go. If the volume, I'm getting a question, if the volume, in other words, most of the volume is up here. I have to clear this to get to this. If I can't clear this, then I can fall out the bottom. So I have a couple choices. I could be selling this, if that's what I think is appropriate, or I can be looking to be a buyer out here. Right now, the sellers are in control. So we'll see. You could trade it from either side. It's up to you. The key to the whole thing is getting risk neutral. You have to say, well, are we going up or are we going down? Nice question. I don't have a crystal ball on that. I know that the trend is up, and I know that we've taken the longs out, the weak longs. I know and we just about filled the gap. So I know that. I know right now look at the delta. The market is short. If I don't find new sellers down under here, that now we've got buy stops sitting above these swings. So it leads me to think that we're going to come back here. But if it doesn't clear this, then yeah, then we can come back under here. That's what I know. I can't tell you what it's going to do because I never have any clue. Are you guys following? This is what's called auction market theory, using the volume profile and using Bookmap to integrate. And we're in a chomp. So what do we know about this? Let's look at this. Two-sided trade, right? And it looks like the sellers are more aggressive, okay? But here's, and maybe, maybe we're done with this for now, and we're going to come out, take out, finish filling the gap, and getting here. So if the short works, I'm going for that. If we're done and we got these sellers trapped, then I'm looking for, and this is all I know. So you pick a side, and and I think the trend is up. What do I know? Trend might be up. I don't think anybody's going to say at the moment the trend's down. So if I'm thinking of this in a multiple time frame structure, and I have the sellers in here, and I've basically come back to yesterday's high, there's the low of the day, and here's yesterday's high, I would say, and here's the liquidity in the order book and the absorption and the stop sweep, all of this, 1,000 sell stops coming out right here. Let me just look a little further. Let me just scooch this up a hair for you. 1,500 buy icebergs. Notice liquidity in the book. That's the icebergs going off. 1,000 sell stops. Notice how retail sellers buy icebergs, taking the other side. Liquidity. There's your buyer. Here's retail sellers. Sell the mid. This is retail trader mentality. Doesn't mean it's the gamblers. Maybe they're right. Maybe they're wrong. First, could you remove that, please? I've asked that we don't have that kind of stuff in here during the stream. Thanks. Appreciate it. I know you forgot. Sellers, and this is a chop. So right here's your consolidation. This is too high. This is the sellers. So this is where we got to clear. Too high, seller. Come back and test, seller. The sellers are in control. The delta is showing us the market is short. This is very important level right here, the initial balance. This is the outside edge, low volume node. Buy stops are here and here. So this is all I can tell you. For me, I want to be long, and it's not a trade recommendation. I can get, I have enough tire tracks that I can prove it that anything can happen. That's just the way of the lay of the land. That's how the market, trading works. In the trader lab, here's the thing that's a little, that is not clear because it never is. Do you want to be short or do you want to be long? What guides you on that? Is it this time frame here that we're just selling this to go back? See, this is where it is conflicted. It totally is conflicted. Are we going here? Or are we going to take these guys out, the buy stops here, and at least come back here? So that's the big question. To get there, you got to clear this. So we just have to watch and see which way it breaks from here. So you pick a side and you ask yourself the question. Are we coming back here to check it because it's the high volume from Friday? Or did we get low enough, misfilling the gap by a couple ticks? Does that show aggressive buying, which is represented by this? And that will take us into these stops. That's the question. I don't have the answer. It's just one trade. So now in Trader Lab, you could be on either side of this. Or if you're conflicted, you don't take a trade. So all I know is it's either that or that. If I get back here and take this out, then I'm looking at the high of the day, and I'm looking at the targets up above, up here. If I can't get back above this and I fall out of this, I'm looking for that. That's what I know. And that's not going to change until the participants vote. Market is short. There's my delta. So now I just got to see. The thing about trading, it's not clear. Even when it's clear, it's random. So there is no such thing. structurally, if we were trading with blinders on and not thinking about the higher time frame, this is a short in a trader lab. So it's really up to you. For me, it's you could play it from either side. The whole key to this is getting risk neutral. So if you're placing a bet, which is what this is where it was too high. If I don't come under here and here, then back here. If I can't get above this volume, which we tested here, then potentially fall out the bottom and go there. That's what I know. Yeah, Sorensen, I think I just went over the read. Yeah, it's you're really right in the middle of no man's land here. One of these sides right here, you have this is your top, this is your bottom, and it's going to come out and resolve. You know, in the trader lab, structurally, it is appearing to be a short for the IB continuation setup, which is this, back to here, this. But for me, it's very conflicted because of this, because I already got down here. I tested yesterday's high. That's my gap, you know. So, and I have my retail up here with a lot of volume. Market has a tendency to come back and check. So, and I know the shorts are in here. So I prefer the long, but I could tell you it could do either. You pick a side because it's conflicted, really. It's a matter of, it's a function of time frame, you know. And as a day trader, I'm thinking this. But I also know if I can't get back outside of here, then, you know, if I spend enough time here and the volume is starting to build here, I got 13,000 versus 16,000. So there's 3,000 contracts difference. If I can't get away from here and the volume now starts increasing over here, that says this is too high. At the moment, this is my outside edge. Guys, this is a consolidation. That's what you're seeing here. This whole thing, this box is a consolidation of energy. And in the middle, this high volume is retail. So we're sloshing, like, I'm not paying that. Yeah, but it's on sale. And retail's where the volume is in the middle. If the participants decide, and that's up to them, that this might be too low, they will go back potentially and check this. Is this really too high? That's the thing. And is this really too low? See? So for me, if I want to be aligned with the higher time frame, I'm on the long side. And it's a hard trade because I know we fell out of, let me just show you. So nothing's easy about this, you know. And let me tell you the part that's not easy. It's actually simple. What's not easy is operating in a random environment. So outside edge. Now here's what this is. This is a consolidation. And you can see this is volume. So this is just showing us outside edge. And let me just hold, you know what's going on or elsewhere. So let me see if I can. This volume here to here. So this to this box is all the volume in here. When we fell out of it, we started another consolidation from here, basically. And you see how it fell out. Now we start this rotation down here. This creates a new distribution of volume. And we're rotating here. This is the outside edge of the current volume area, and there's stops up in here. So I know if I come back up here, stops are going to be at mid and VWAP. And then I'm either going to pop those guys and rotate down or pop them and come back here. That's what I know. Or none of the above. So let's go back here and see what it's going to do. You see how it's just rotating. So we're just in a rotational trade now. So the thing you do is either you pick a side, get risk neutral, and just take the random outcome of the distribution. That is the real world of this. And we always go back to gaming theory. And you have to kind of think in multiple dimensions and multiple time frames. You know, again, for me, it's what's the trend? Up in the higher time frame. Where was the gap? Here, yesterday's high. What's retail currently? Here. Where's my buy stops? Here, here. And if I come out of there, then back to here. If I come out above here, then the possibility is to go back to the targets from this morning. None of that has changed. We just don't know if we're done. No way to know. And this is our upside target in this. So if we take out the high of the day, potentially up here. If this yellow line shifts down to here, it might be saying this is too high. That becomes resistance. It's still resistance. But we have to clear this to get there. That's what I know. That's all I know. I'll never know anything until I have the benefit of hindsight as far as which way. And it's always not clear because that's trading. It's never clear. And the casinos, when they deal the cards, remember, they don't know what's coming out of the deck. They don't know what the gamblers are going to do. They're in a completely random environment just like we are. That's our business model, gaming. They only play games that have an anchored statistical edge. And the big problem we have as retail traders is not understanding gaming theory and what creates the games. The games are only played with anchored inputs, not random inputs. And most of us early on in our trading career, until we figure it out, is we are playing the gambler's game, random inputs in a random environment. And the gamblers win, even though statistically they don't have an edge. They still win. And most of us are trying to increase our edge, thinking it's a tuning or more time frames or more indicators, whatever. And I call that trader groundhog day. That is kind of I think the issue for most retail traders is they think it's just getting closer to it by squeezing risk out and creating certainty. That is a psychological and an emotional need. It has nothing to do with the business side of trading or how casinos operate either. They can't squeeze the risk out because they don't know the outcome of the next hand like we don't know the outcome of the next trade. What they do is only trade or play structured games that have a statistical edge, and they accept the random outcome each time they interact with the gamblers because they have no control over the cards, they have no control over the gamblers. If we're in the same business, so instead of trying to fix something that might be a defective process, and early on, most of us think it's tuning, tweaking, adding, subtracting, whatever. More indicators, more certainty. Our emotional need is to not be wrong, is to not feel the pain, and our nature is to want to predict. Those are all fine out in the world. They don't fit in this business. They're not in the trading world, which is the gaming world. Casinos can't predict what's going to happen either. Yet they do pretty good, right? They pay the gamblers. They give you the cocktails. They coupon to the buffet and maybe tickets to Adele and the rest of it, right? And they still build bigger casinos. They just play their games. And my primer webinar that is posted in the Trader Lab, and you're all welcome to visit the Trader Lab, by the way, 60 PDFs of structured trades you can look at and reverse engineer, plus a library of webinars. But the primer webinar gives you a high-level overview of this concept of how does the market work, why does it do what it does, plus understanding the business of trading, the anchoring of inputs so you can actually have a statistical edge. This behavior in here is all random. It's either going to break down to here initially or hang out in here, build energy, and if the current shorts, which is what you're seeing in the delta, if they can't go anywhere, they're all going to cover and get squeezed. So that puts this. So that's our trade. Our current trade, and these aren't recommendations, if we fall out here or squeeze to here, come out the high, and you can write these down. They're not recommendations, they're just ideas. Our target's here and here if we take the high out. Otherwise, if we fall inside yesterday's range, then to here. And anything can happen. Hope you got something out of this. And by the way, if you're in YouTube, there's a link in the bottom of YouTube. If you're interested, there's those 60 PDFs of structured trades, circles, arrows, so you can reverse engineer them. In the Trader Lab, you're welcome to the Bookmap Discord Trader Lab chat. It's a community of like-minded traders looking to leverage their collective, experience. We've all done what you've done. Some of us have done it longer than others. For me, I'm going on 44 years of trading. And I always say it's not a badge of honor, it's a badge of pain. Kind of trying to fix a defective process, and I call that Trader Groundhog Day. You may be putting the time and the energy in, but your process might be defective, and you won't know that really until you kind of step back a little bit and understand the business you're in, which is gaming. So it's not predicting, even though we want to know. That's our nature as humans, but that's not the business of gaming. So it's really kind of divergent that way, isn't it? So remember, we fall out, overnight volume point of control. So it looks like we may fall out. Any final questions before we go? Please give a thumb up in YouTube. The link in the bottom of the YouTube channel will take you to the Trader Lab. There's a lot of free additional education, order flow, of course, stocks, options, crypto, swing trading, market maker behavior, algorithmic behavior, and of course, how to use a high tier tool like Bookmap, how to integrate it into your trading. I call it the tip of the spear. And there's a lot more to this that you can do. My goal here in the stream is to help you understand that you can reverse engineer structured trades. And then if you can define the condition of the market, which you notice it's rotational here, if you can define it, you can align structured trades and get into alignment with them. So we have two trades here. One is called the IB continuation, which is a short. The other one is the potential here to squeeze out the shorts and get back over the mid VWAP back here. Those are the two trades. Whichever one works. Hope you guys are with me. Hope you got something out of this. I appreciate you visiting the Trader Lab. Please give a thumb up in YouTube on the way out. Also remember, these streams are available exclusively to Bookmap Discord Trader Lab participants for reverse, review, reverse engineering, screenshots, circle arrow. The business of trading is really one of this is a language of the market. I don't use indicators. I'm really reading the behavior of the participants. And that's my real-time, quote, indication. So we have either, the long or the short. The short's out from here down, and the long would be squeezing up and back to here. So it looks like the sellers are going to win out in this leg. We'll see. Thanks again for visiting the Trader Lab, guys. Appreciate you stopping by. As always, thumb up. And if you're interested in the Discord Trader Lab chat, which is an online community of serious traders looking to leverage their collective experience, click the link at the bottom of YouTube. Come on over, say hi. You don't have to be a Bookmap subscriber, and Bookmap will never solicit you, now, ever, never. Thanks again, guys. Appreciate you visiting the Trader Lab.